Hey, what's up, guys? Can you hear me? Some huge news just dropped in the real estate market, like 2 hours, just a little bit ago, but not many people know about it just yet. And I think this could sink the entire market. Check this out. This is absolutely, this is fascinating to me. Can you guys see this? Hold on one second here. So this just dropped. A new tax plan would sink real estate. So what they are intending to do right now is real estate, the long-term risky and labor-intensive investment. Now what they're trying to do is, under this new House bill, the taxation of real estate operating income would drop from 29.6%, 37% minus 20. It's going to take it to 46%. So 46% tax, 39.6% maximum base plus 3.8. You're going to pay roughly half of all of your operating income in tax, plus 3% surtax for some without deduction, and real estate capital gains would rise from 20% to 31.8%. For all the house flippers, people that are out there trying to turn properties over pretty quickly, they would face a tax of roughly 50%. 50 or about 30% more tax for the house flippers. Meanwhile, material costs are skyrocketing. So we have this coupled with a 25% maximum base on capital gains, 8% investment tax plus 3% surcharge for some. And then if you're successful, an additional 16.8% transaction tax and an additional 11.8% capital gains tax. At the same time, new limitations are gradually being put in place to reduce mortgage interest deductions and depreciation, rising rates while limiting deduction losses at the same recipe as the 80s. So let's see here. You guys, let's see here. Hey, what's up, Johnny? Why get out of your house? Yeah, this is some really interesting stuff here. So if what I'm thinking happens is we're going to see a situation where we see a lot of landlords that are leveraged. I mean, very, very leveraged, because the traditional business model for a landlord is pretty simple. Most people follow this model. It's called, the BRRRR model. They'll essentially buy a property and they'll rehab it and they'll refinance it and repeat it. So let me give you an example. They'll go buy a 10-unit apartment building and all the rents are, say, $1,000 a door. So it's making roughly $10,000 a month, $120,000 a year in gross income. And what they'll do is they'll make some small improvements to increase the cash flow. The value of the building is based on that cash flow. They'll call the lender. They'll get out a loan on that property that will replace their initial loan in most cases. And it's more than the capital that they have allocated into that property. And they'll just keep rinsing it and repeating it on all these different properties and do it one after the next. So now if they're going to be going after you in terms of your operating expenses, they're going to be taxing you based on the operating expenses. They're going to be decreasing your deductions on what you can actually write off on your property and increasing your costs dramatically for you as the operator. It's going to equal big problems for those landlords that simply aren't in a situation to where that they can weather those problems. But the other landlords that are heavily liquid, they're going to probably sit in a better situation, because what they're going to be able to do is they're going to go out there and buy a lot of this distressed property. the big problem becomes, if this is what is happening right now, where does this ultimately lead for these real estate investors? Hey, John, how do you think wholesalers should pivot and prep? That's a really good question. So if you don't know what a wholesaler is, essentially what a wholesaler is they're a real estate agent without the license. And to keep it very simple, what they essentially do is they'll find a home seller, they'll get a contract signed, and then they'll sell that contract to a buyer for more money. And they make this spread on what the contract was signed at versus what the buyer will pay. So very simple. But what wholesalers are doing right now, or what they're essentially going to be forced to do, is they have a harder job because the market is so hot right now that most investors, they are a little bit weary of how long this can continue. So this bull run. So you're going to be selling that investor on a real high price, plus the home seller is most likely not in reality for now. But as the market temperament changes, then the reverse happens. Essentially, the home seller is more excited to get out of the property, but the investor doesn't know how far the market falls. So you as a wholesaler, your job right now would be to really build out as many relationships as possible that are going to, be able to put cash down on the table right now, because the market right now is not going to last. It's not going to last. If I were a home seller, if I had an intention to sell a property, I'd probably do it now over, say, a year from now. So I just don't think that this economy is going to be able to hold up. But everyone's bad, or there's some good spots. Let's see here. Yeah, I mean, so when we look at this, so in addition to the toxic brewing, Biden's proposing a sea of change in the way real estate assets are treated when a homeowner passes away. He proposes to tax the increase of the death tax, which has been consistent in the tax code for a century, so 100 years. There's been a fundamental reason why families make long-term multi-generational real estate investments. Removing the free base increase creates a deterrent to long-term investment and ensures even less capital flowing into real estate. Whether a generational transfer of ownership is taxed on death at the proposed capital gains rate of 31.8%. So you think about that, if you have $1 million property and you pass away and it's taxed at 31.8%, your heirs would have to write a check for $318,000 just as a tax, as a tax. Or proposed higher ordinary income rate of 46.4%. It may also be subject to a tax on proposed death tax of 45%. That is massive. So $1 million property, write a check for $500,000. And that's before state taxes. So if you live in California, I did a video on this a while ago. If you live in California or New York, some of these taxes with state and federal could be as high as, for New York, from what I remember, it was like 85%, something along those lines. So $1 million property is roughly $850,000 issued just in taxes. And that's before state taxes. The huge global tax bill on death will force estates to sell properties to cover what they owe, as 1986 and 2008 proved. Forced selling in real estate markets wreaks havoc on financial markets. Now, it's also going to be a really good time too, if you have a couple dollars rubbed together, to probably get some really good legal counsel and speak to an asset protection attorney, speak to an estate planner, build out plans, because when times get difficult, it's really good to have a proper plan, and everyone has their own situation. So pretty crazy. What Congress did in 1986 for real estate was tax shelters was deliberate. What he did to the S&L community loans, investors, capital markets, and Main Street was not intentional. This time, it's pretty much the same, but the efforts will be larger. Everyone is directly or indirectly exposed to the CMBS market, and falling real estate values are very disruptive. Total CMBS loans are now approaching $4 trillion. If passed, the Democrats' property tax proposals will lower property values. This sudden and general decline will be recessive. Recessions have hit all Americans, not the few Congress and presidents are targeting with the legislation. Washington is in serious danger. So what'll also be something that we all need to take into consideration here is that we are going to see a situation where a lot of industries are changing right now. And so with this massive change, there's going to be a lot of people left behind. So it'll be interesting to see how real estate as a whole pivots and where this all leads. But, heavy taxes right now and increased exposure to these taxes at a time when many landlords have been bleeding out due to the eviction moratorium, it could equate to some really, really big problems for, mom and pop landlords and the investors that don't have that deep capital. Yeah, it's my dog. I got a little, I got a sheepdog here and another dog in the back. Hippo character smacks hands on his face. Thanks. Oh, perfect. Cool. That's my my first contribution on my live. So that's really cool. I just got a whole new setup here, so I'm really excited to kind of go live stream with you guys more. Hippo character smacks his hands and I don't know how I remove it. Let's see here. There we go. When will this law pass? So I'm not sure. A lot of things look like they're going to be coming into fruition very soon. Someone asked, would I consider leaving the States? I'm not sure. I'm not sure about that. It's a good question. I think that a lot of people are asking themselves that question. But I really love real estate. I really do. But these big changes, I've been talking a lot about on this channel, is that I think real estate is going to go through some big pain. And I think the economy is going to go through some big pain. And so right now, we're all kind of in this interesting period. We're in this interesting transition now where people are trying to get rid of their cash, but at the same time, they want to hold on to cash so that they're able to deploy that liquidity into assets. But it's a really interesting dynamic that everyone's trying to play successfully right now. But yeah, I still love real estate. I think what ultimately is very likely to happen with real estate is that I think a lot of investors get out of the market. But what I also think happens is that we start to see, 2 and 3 people living inside of one bedroom each. And we start to see really a situation where we got 8 or 10 people inside of a 3-bedroom house. But, oh, no worries. Thanks so much. Yeah, so 2022 is what you mentioned, and that could very well be. I mean, that's only 2 months, 3 months from now. So, yeah, pretty crazy. What do you guys think is what's going to happen with this? Do you think that we're going to see a really big transfer of wealth in the real estate industry? I hear Vietnam is okay. Yeah, I mean, I have people, moving all over the place, but I feel like, some people are moving for other reasons. But yeah, it'll be interesting to see how this all passes and how this all behaves over the next week or 2 weeks. I'm going to keep everybody updated. I just wanted to hop on here and do a quick stream and kind of give you guys the inside scoop. I'll catch you guys in a little bit.